Hi, I'm John Stevenson, the Guaranteed Retirement Guy. Today we're going to be talking about what $500,000 will give you in the form of income from a MYGA contract, a fixed annuity. So what is a MYGA? Well, a MYGA is kind of like a CD. It just pays you a stated rate and it'll do it for a stated term. So if it's for 5 years or 10 years, it'll pay you whatever that rate is. And right now rates are high. And so if you're getting 5 or 5.5%, then it's guaranteed for that term. Now, in order to take it out as income, you also have to have it inside a company who is allowing for you to take withdrawals from it, because some do not. And so I'm going to share my screen with you and I'm going to show you all the top paying MYGA annuities. And then after this, I'm going to tell you what $500,000 will also do for guaranteed income if you want it longer than this term. Okay? All right. So you'll notice from my screen, I'm looking at everything. Okay? This is just the first page. Now, I'm filtering by rates, and you can see the highest rate is a 5.9 for 3 years. Well, that's pretty good. But if you want it for longer, like 10 years, then a 5.8 with Heartland National is probably the way to go. And they allow you interest only. You see the withdrawals here? If they don't allow you withdrawals, then don't get them, because you're not going to get these for income anyways. Because a lot of people will just put money into these because they want the tax deferral status of these accounts and they want the compounded growth. Okay, but if you're looking for income from a MYGA, then you need to get interest only, or at least a 10% free withdrawal, right? So let's look at this again. We'll say, all right, well, we've got interest only, Heartland National, 10 years. Usually if you're looking for income, you probably want to go out 10 years at least, because you want to lock in as much as you can before you got to roll it into something else, because it'll usually revert to a much lower rate, like 1 or 2%. Okay, so let's take a look here. You'll notice here that for 10 years, I've got Heartland National on top, and then I've got Equitrust, American National, Ocean View, followed by the rest of these guys. So, and again, they're all around 5%. And then you start getting down 4.9 with Penn, the Standard, Royal Neighbors, and so on. So, but look in here and say, all right, well, interest only, 10% free withdrawal, 10% free withdrawal. Okay, good. So I would probably, if I was going to spread my money into any company, I'd probably do it right now into Ocean View, American National, or if I wanted the highest rates possible, I'd do Equitrust and Heartland. Or you could spread it out over all 4 of these if you wanted. So that's probably what I would do, because you see interest only, so you're not going to get as much. If you wanted to take out more than the interest, like some of your principal, you're not going to be able to do it with Heartland and Equitrust. But with American National and Ocean View, you actually can take up to 10%. Okay? Just curious if there's any others more than 10%. There were like 15%ers somewhere, but they pay a much, much lower amount. All right, so if I look at these and say, all right, well, I want to take out so much interest, let's say $500,000 of Equitrust. If I'm taking interest only, then, well, that's 5.6% multiplied by 500K. I'm getting what, $25,000, $26,000 out a year in income, right? Okay, well, that's not bad. I mean, I'm taking that income for 10 years. At the end of 10 years, I got my $500,000, and maybe I'll put it into an income annuity at that point and pay my income, or maybe I won't. Maybe I'll just roll it over into another MYGA contract. But if rates are low, then, if it's only 2% at that point, what if the Fed's got it back down? Well, that's not going to be good. And so then you got to start asking yourself, well, what are you going to do with this money later? Are you going to use it for income later? If you are, maybe you should think about a fixed indexed annuity versus a MYGA. So it's up to you. If you just, hey, I want to put this money back in the market at the end of the term, or I don't need it for income, then that's fine. We'll just roll it into another MYGA, or put it back into your IRA if that's where it came from. So, but taking the same 500,000, I'm just curious. So we know that we can get like 26,000. But if I'm looking here, and what if I put the 500K in Heartland? Okay, I just want as much income as possible for 10 years. Well, that's $500,000 times 5.8. That's $29,000 a year. Well, that's really good. So I'm getting $29,000 a year, and then at the end of that period, I got to figure out what to do with that money in order to get more income from it. So if it's half of that rate, then I'm going to get half of the $29,000. I'll be down to $14,500 a year, right? So that's not going to be very good. But let's compare that. So the $29,000, and let's say all things stay equal and the rates just never change, and they just always stay at that 5% or 5.8. Then, all right, then I know I'm always going to get that $29,000. So let's take a look at an income rider. Same 500,000. Now I'm just curious at this point, and I'm going to take income immediately, just like I would with the MYGA. Actually, you know what? You're not going to take income immediately with a MYGA. You're going to take income after a year because you got to give it 12 months to grow to earn that 5.8, right? So let's just say all things being equal, same $500,000, right? I'm a year older, and, you know, let's say I put it in when I'm 65, then at 66, now you can see some of these will kind of give you a higher payout in the beginning, but then they lower it drastically, 49,000 to 29,000. So if you're looking for the highest level payment though, Equitrust beats everyone. So it's 47,481 a year. Ooh, that's pretty good. And you look at National Western, if you're looking for an A-rated, they're the highest right now. So there you go. If you let that sit for 1 year, 12 months, that's going to give you a payout of 44, almost 49,000. So that's basically 20,000 a year more in guaranteed income during those 10 years and every year after that. So if interest rates go down, it doesn't matter. You still get that money for the rest of your life. So that's huge. So I'm like, all right, so 45,000 coming out. Actually, I guess I digress. So that's 45. That's not 20,000 more. It's a little bit less. Like what is that? It's like 16,000 more, something like that, I think. So 45 minus 29, yeah, 16,000. So you're getting $16,000 more per year. 16 times 10, it's 160,000. And then, of course, if you get that for another 20 years after that, it's another 320,000. So more income, more guaranteed income from an income rider, if you so choose. Totally up to you. But if it was me and I was looking for highest income for the rest of my life, I would choose the income rider all day long, especially when rates are high right now. I would lock it in because you don't know what's going to be at the end of the 10-year period when you have your MYGA contract and you want to generate income. And so I'm going to assume that you did the MYGA contract, okay? At the end of the 10 years, you're 76 years old, and you want to turn it into immediate guaranteed income at 76. Okay, so let's say you decided not to take my advice, and you're like, all right, well, I'm just going to do the MYGA, and I'm going to take my chances. Okay, I'll put it into an income contract after 10 years, okay? Immediate. So the highest, well, yeah, you don't want to choose that one, 55,000, and then it reduces to 30 grand, okay? So if we go highest for life, it's Gillico, 47,250. That's pretty good. That's a little bit higher than the 45,000 we are guaranteed. The only problem is this is based off of today's rates. And if today's rates are lower in 10 years, that 47,000 will be lower. Okay, so, and this is all hypothetical. This is based off of everything stays equal in 10 years, and it's not going to. Okay, so again, I mean, it's not bad. That doesn't look bad. Maybe you'll get close to that. But if you want an absolute guarantee, put it in a fixed index annuity with an income rider, and you're going to guarantee yourself $16,000 more in income every year for the next 10 years. And you'll still have that contracted income afterwards that continues on for the rest of your life, regardless if rates go down. So anyways, that's my opinion. Take it as you will. But if you want to chat more and you like what you hear, and obviously you can see that I'm going to show you everything, then book a call with me. There's a link below this video, and it'll go straight to my calendar, and you can ask me questions, and I'll just, I'll show you everything. I don't care what the commissions are. I show you everything, okay? And then you can make the decision. I'm happy to help set this up for you if it's something that you think makes sense. And of course, if you're looking for a MYGA, I'll show you all the MYGAs because I sell MYGAs all day long as well. All right? So look forward to chatting with you, and we'll see you in the next video.